With stocks near record levels, some investors are growing concerned that a pullback is due. If you're in that camp, how should you prepare for a potential pullback? Well, Dominic Chu asked the pros.
With stocks continuing a trend of setting and hovering near record highs, it may seem somewhat odd to talk about a possible pullback in the market. But some Wall Street experts are looking to fine-tune client portfolios to protect against potential losses, or at least hold up better if things go south.
I think in this environment, you should have some cash reserves. Right now, we're overweight cash. However, we are still long risk-based assets.
There are lots of definitions for what makes a high-quality stock. According to stock strategist Christopher Harvey at Wells Fargo Securities, he's looking at how things like low levels of debt, as well as better trends in profits and margins, could define quality. That's among other things. He finds that they have tended to outperform on bigger down days so far this year. But a larger scale pullback may not be as close as some think.
Historically, in the fourth quarter, the market does pretty well, and I don't think this year is going to be different. Now, at this time of year, the market tends to trade off a little and bounce back kind of mid-October until mid-December, so maybe we won't have as powerful a rally. But I think the reality of the fact that next year the numbers are going to look pretty good to start is going to lead to a pretty good fourth quarter.
Top-ranked financial advisor Richard Saperstein of Hightower Treasury Partners believes there are other reasons to be more positive on the market, like rising earnings, a global economic recovery, and the potential for tax reform in the U.S. As a long-term investor, he'd be using pullbacks to selectively add to client portfolios. For Nightly Business Report, I'm Dominic Chu.